Imagine you want to buy a big toy that costs a lot of money, but you don't have enough money to pay for it right now. You can ask someone to lend you the money and promise to pay them back later with some extra money. That extra money is called interest. The person who lends you the money is called a lender. The toy is called a home, and the money you borrow is called a mortgage. Sometimes, people make mistakes when they borrow money for a home. Here are some of the mistakes you should avoid. 1. Not checking your credit score before borrowing. Your credit is like a report card that shows how good you are at paying back the money you borrow. The lender will look at your credit score to decide if they want to lend you money and how much interest they will charge you. If your credit score is bad, you might have to pay more interest or not get any money at all. So, you should always check your credit score before borrowing and fix any mistakes that might make it look bad. You can access your credit report for free from annualcreditreport.com. 2. Not getting pre-approved instead of pre-qualified. Pre-qualified means that the lender gives you an estimate of how much money they might lend you based on what you tell them about your income, debts, and savings. Pre-approved means that the lender checks your credit and financial information and gives you a letter that says how much money they will lend you and at what interest rate. Pre-approved is better than pre-qualified because it shows the seller of the home that you are serious and ready to buy. To get pre-approved, you will need to give the lender some documents such as pay slips, tax returns, bank statements, and ID. 3. Not comparing different lenders. Different lenders might offer you different interest rates and terms for your mortgage. Some might charge you more fees or penalties than others. You should always shop around and compare different offers from different lenders before choosing one. You can use online tools Mortgage Calculator to see how different offers affect your monthly payments, total interest, and loan duration. You should also look at other factors such as fees, points, closing costs, and penalties that might affect the total cost of your loan. 4. Not understanding the different types of mortgages and choosing the wrong one for your situation. There are many types of mortgages in the market, such as fixed rate, adjustable rate, conventional, the Federal Housing Administration FHA, Veteran Affairs VA, U.S. Department of Agriculture USDA, jumbo, etc. Each type has its own pros and cons depending on your goals, preferences, and eligibility. For example, fixed-rate mortgages have the same interest rate and payment for the whole loan term, but they might have higher interest rates than adjustable-rate mortgages that change with market conditions. Conventional mortgages are not backed by the government and have stricter requirements than FHA or VA mortgages that are backed by the government and offer lower down payments or interest rates for qualified borrowers. Jumbo mortgages are for loans that are bigger than the normal limit set by Fannie Mae, formerly known as the Federal National Mortgage Association, FNMA, and Freddie Mac, formerly known as Federal Home Loan Mortgage Corporation, FMCC. They might have higher interest rates or fees than regular mortgages. You should research the different types of mortgages and talk to a mortgage professional to find the best option for your situation. In conclusion, borrowing money for a home is a big decision that requires careful planning and research. You should avoid some of the common mistakes that people make when they get a mortgage, such as not checking your credit, not getting pre-approved, not comparing different lenders, and not understanding the different types of mortgages. By following these tips, you can find the best mortgage for your situation and save money in the long run. Remember, a home is not just a toy, it is an investment that can affect your future. So make sure you borrow wisely and responsibly. I hope you found this video informative and helpful. Let me know what you think about it, and please leave a comment below. Thank you for watching. See you next time.